Hello, my name is Alessandro Rocco Pietrocola and welcome to my YouTube channel. As you know, in this channel we talk about fintech, lifestyle, financial education and investment. If you're not yet subscribed, just smash the button now. Today I'm joined by my very good friend Thomas Kralow.
Thank you very much for having me.
Always a pleasure. We are going to discuss about opportunity you may have in investing into stocks. He was an active trader. He's now in education. I will put the link also in the description so you can check out his website and programs. And we are going to discuss today how to pick a stock, how to better invest,
how to get into the stock market in general.
How to get into the stock market. What the things you should consider to get
before jumping into something like GameStop. Yeah,
absolutely. So Thomas, let's get started.
All right. So as for myself, Alessandro, as you might know, that I've been into active trading for a while and I also put together quite a few interesting portfolios. And also there is an interesting stock market that we can actually also discuss in this YouTube video. So watch until the end. There is an interesting, very undervalued stock market that anybody can actually take advantage of at this point right now. And in general, there are different ways of trading. So I'm going to go into too much detail between, crazy things like Forex trading and long-term stock investments. Those are completely two different things. And today we're talking exactly about the stock market and how to get into the proper ways of investing into stocks. Because that's what a lot of people want to do, right? Because they want that passive income. They want their money not to be just in the bank doing nothing but making money for the bank. They want that money to at least have an opportunity to produce at least something. So to at least go past the inflation so that the money is not actually losing its value. Because a lot of times when the money is in the bank, it's actually losing its value. Because of the inflation. So a lot of people are starting to actually realize that they should be a lot more financially responsible and financially educated so that they can actually use their money for making money.
I think the financial education, it is one of the things I always teach, and I put a mark during my wake-up call or consultation. It's fundamental to really level up in life. And at the moment, there are so many opportunities on the market that if you study and if you see the proper way, you can do really good money and you can preserve your capital.
Yes, of course. This is just imperative, I believe, in today's world when there are so many people who are making money. But what they do, I know lawyers in New York who are making more than $100,000 per year, but they end up paying some car loans, some mortgages, some child support, so living that American dream, and they end up having like $300 to their name when they are good lawyers and they're making, six figures basically. So, and that's something that people are just financially uneducated. And
absolutely.
Right now it's, as with the online education and everything becoming available, because even stock trading, it used to be only for hedge funds, investment banks and stuff like that. So right now it's becoming available and people are jumping right into it. Robinhood itself, they have like 10, 11 million traders.
Yes.
Incredible.
But
you have to always think like, how many of those traders actually know what the hell they're doing? A lot of people, even the people who come to learn from me and learn my ways of trading that I did for quite a few years, a lot of them tell me their stories, how they used to invest money. Most of the people were investing in just some overpriced, hyped up rubbish stocks like GameStop. What's your opinion on stuff like GameStop?
It's not a good point to pick a stock just because it's trendy on the market. Most of the situation where it starts to be, let's say, famous and everybody talk about is the moment to sell it.
It's the moment to sell it. Yeah.
Same for Bitcoin. Same for any other stocks. When it starts to be popular and mass media talking
it's
a
already
lot.
Too late. Yeah,
it's already too late.
And I agree with you. So many people. There is one guy who joined one of my learning programs. He told me that he lost about $50,000 or so on GameStop alone. So he got in at the peak. And if you think about it, I mean, when I buy stocks, I buy them real low. So I want the stock that is, it has potential, so it has intrinsic value. The company fundamentals are good, so all the reports, projections, blah, 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 everything checks out. And the company, for whatever short-term reason, might be undervalued a little bit, or maybe there is some kind of a crisis happening in the world, like with COVID. During the first COVID wave, you could get into many stocks at an incredible discount. Yeah, at like 30% discount, 40% discount, and this is a good way to do it. So, for example,
I like the word discount.
Discount.
It's the right mindset how to call.
I think you've mentioned it also in your story that and it's a good point. I liked it very much that if, for example, you bought the stock today and tomorrow it would have been at minus 30%, for example, would you see it as a loss or would you see it as an opportunity to get into it more with a discount and get yourself a nice average price? And I agree with you. So this is something you really have to believe in the stock. So for you to believe in the stock, you have to understand it.
You have to understand, yeah.
So if you don't understand it and you just go out and buy some rubbish like GameStop because everybody's buying it, prepare yourself for losses, buddy, because you're gonna lose a lot of money very quickly. There are some success stories. I mean, there are people who get lucky, but...
Of course, but we are talking about to be as much scientific possible.
Scientific, yeah.
Yes,
yeah.
rather than betting. Obviously, there is even who won lottery or who won casino. So, but it's not the way how you should...
this is not very responsible.
How you should face the investment you are picking. Yeah,
you can be a gambler or you can be Warren Buffett.
Exactly.
Because Warren Buffett or Goldman Sachs, how can they produce such results year after year, like what, 30, 40, 50, or whatever? It's crazy. Systematic.
Buffett is 7th year that he always
in profit.
Always in profit every year. If it go bad, he do 15%, 20% when it's when it's not going well.
And that's, number one. So you have to understand the stock. So you have to understand the technology behind it if it's a tech company, for example. So you must understand who the founders are, for example. What's the future of the company? Who is leading the company? So who is the CEO? Background. Everything.
The possibility that they will develop.
Scalability.
Scalability, absolutely. And also if there could be some market condition that could obstaculate the development. For example, it's a brilliant idea, but it can go only in operation if something happens. Yeah. So going to study this if it's an if of 1% or it's an if of 99%.
Yeah.
So everything.
There's so many factors.
So many factors what you need to take into the consideration before to make a decision. But if you take all these factors in consideration, I don't say that you have 100%, but you have a very good probability that you will
make money.
Yeah.
Yes. Plus, it's also super important to understand that you cannot invest into a few assets, so into a few stocks. What's your take on the minimum amount of stocks in your portfolio?
I think maybe 10.
Minimum, yeah.
Minimum, I would say minimum 10. If we're talking about stocks and if it's some field what I understand and I can evaluate, I would say at least 10 stocks.
Yeah. So that's what I am thinking as well. I always like the number somewhere between 10 and 20. So, some people go as crazily as like 50 companies, but then you're going to be...
It's hard to follow.
It's hard to follow.
If you have a team, maybe... But if you are just an investor... And I think until you not have 10 million as 10 million to invest, you should study, know, and do yourself and understand what you're doing and the product you are buying on. So it's going to be very difficult to follow 50 stocks or 60 stocks or more. So 10, maximum 20. It's a good amount of money, stocks that you can follow. And you should really love it, because if you invest, means that you understand what is behind, you believe in the project, you are fan and supporter, so you read all the news, you follow whatever it happens.
You keep track of it.
You keep track on it. It's not that you just buy and you forget. So it should be something what you understand, what you follow, what you understand, what you're buying, and what is that you understand what is the target, the final goal of the company you are investing in. Because buying stocks in the end of the day is becoming a part of this, and you don't want to be a part of something what you don't like or you don't believe in.
Yeah, because that's just the recipe, as we like to believe in the positive mindset and the positive vibrations. So if you don't like your investments, it's not exactly going to be making a good chemistry, because it's something that you have to be like one of those yogis with your stock market and the stock, and you have to be certain, because when a lot of people also, it's impulsiveness. So you have to be certain in that your analysis is to the best of your ability and you really believe in what you're buying, because otherwise you're gonna, at the slightest shake, you will be selling off. And then it's gonna be like, loss. And like so many other traders do this. So diversification, patience, and intellect. So you have intellect, I should say, probably intelligence in the matter of the asset that you're purchasing. So you have to understand the company. And it's also, and that begs the question. I mean, if we need to have at least 10 companies, then I mean, how much money would you, Alessandro, recommend for somebody to start with in the stock market? What would be that minimum that would make sense to put together a nice, low-risk portfolio?
I would say $100,000.
$100,000.
Yeah, for stock market, yeah. Because if you're doing, if you do it 20% a year, then on including dividend, including everything, 15. So it's something like at least $1,000 a month, at least to cover the time you're losing and spending to research and keep an eye on. And so I think that is the right.
That's the reason why, because it's a lot of time, it's a lot of work, and you really want to get paid for it. And it's not something, I mean, why do people get into something like GME? They put in their last $50,000 just to become rich overnight.
This is, I don't call investment.
This is just idiocy.
It's idiocy, or better, gambling with a financial instrument. Investment is people who understand what
even Warren Buffett, I mean, he's great, but he has been producing the result of what, 20% per year?
Yeah, 20, 25, yeah.
I mean, and Warren Buffett is a freaking genius.
Yeah.
So if Warren Buffett could have done, 100% a year, he would have done it.
Yeah.
So this just shows you a great example. I mean, sure, I mean, he is doing it very conservatively. So, I mean, you can be a bit more aggressive and you can maybe pull something like 30% per year, maybe.
Yeah, but this is the same like in UK. I have many friends that they like the scratch card or betting. Oh, I won £500. But when I talk to them, listen, but before you won £500,
how much did you spend?
Did you spend it? Maybe it's like 5 years at least that I know that you buy £5 the ticket. So probably you spent 5,000 and you won 500. So, and the same in the stock market. They celebrate the day when they
becomes an addiction.
Do 100. Yeah, they do 100%. But there are, I'm sure, the majority of time. Otherwise, there would be everybody the next Warren Buffett. Yeah. The majority of time where you do huge minus. Yeah, so I prefer slow and growing every year.
But that's the only way to do it.
The only way, exactly.
Otherwise, you might get lucky a few times, and the probability of getting lucky is still very low. You'll probably still screw up, and when you screw up, I mean, it's just not going to lead you absolutely anywhere. And even if you're lucky a few times, you will still at some point lose pretty much everything you've earned.
Absolutely.
So it still is. You either do it correctly, or you just don't waste your freaking time and money, because it becomes. A lot of lives have been destroyed by the stock market, by gambling in things like Forex. Absolutely. So you have to be extremely careful. And that brings us also to the question of leverage.
It's a huge question. What usually I don't like leverage because I'm like very long-term.
It's the most dangerous thing you can ever do.
Yeah, the long-term investor, and I like to buy the stocks I can afford. And even if I have any discount, I don't have any problem to keep the shares or to buy the stocks or to buy more stocks if it's needed. So I don't depend on any system or any broker. So I have no any external condition that are pushing me. Yeah. I just have my money invested and that's it. I rather more focus on making more money to invest than to follow the leverage and all those kind of things.
Right. So that's what always has been my opinion as well. I've never put together a portfolio with leverage, even crypto. I mean, the crypto is so volatile, you don't even need leverage.
Crypto is only good that apart that probably you don't need, but there is still greedy people. They are crazy. They go on not Bitstamp, how it's called, BitMEX with 50x or
Yeah.
crazy
They end up. There are people. Today I received a message on Instagram, and by the way, follow me on Instagram. There was one guy who sent me a message saying that he lost 2,000 euro, all of his money, in one day. So I was like, holy shit, dude. And he was like, yeah, it was because of my trading psychology. And I was like, it probably wasn't just your trading psychology.
Yeah, exactly.
People are absolutely mad when it comes. But why that is? Because they see advertisements of some gurus who are some options traders or some super leveraged binary traders who are, driving Lamborghinis, making like $1 million off of $500 in 2 weeks. It's just nonsense. It's mathematically, maybe it's possible, but it's just the same as we spoke about. There is a difference between theory and practice.
Absolutely.
And in practice, it's just like going to a casino with $5 and hoping to walk out with $1 million. It's close to impossible. If it were possible, then the casino wouldn't exist. So it's like winning a lottery. So if you want to take it seriously and you want to make money, you want to preserve your capital, you want to invest your money, forget about leverage. Forget about pump and dumps like GameStop when there is really no intrinsic value. It's just being drawn up by something beyond the intrinsic value. So it's like a hype. It's something that is, synthetic. So it's not even the value of the company. So stay away from that. Maybe you can, for the beginning, to keep your risks low, you can stick with something like blue chip stocks. Blue chip stocks are those, good old boys that are, very reliable, so to speak. So you can get a sensation for what a stock market is like. But, and always diversify. Get in at a discount, but make sure to understand the difference between getting in at a discount, so when something happens, and getting into a shitty stock, because the stock can be dropping for a good reason. So if, for example, the stock was $100 and now it's suddenly $20, it doesn't necessarily mean it's a good stock to buy at a discount. There might be a good reason why it's dropping, and it might drop to zero in the next few weeks. So you have to be very careful about this as well.
And understand what is the behind.
What's behind it. And it takes a lot of time, it takes a lot of practice, and I would personally, I'm an educator, so of course I'm going to say it, but I do still strongly believe that it's better to spend some money on education and get educated in the world of active trading or long-term investments from somebody who has at least some kind of an experience, so that it's going to save you years of time and probably a lot of money as well. Because people, sometimes they say, it's so expensive, a few $1,000s for education, or even $500, whatever, it depends on the package program you select and the educator. But at the same time, there are people who are losing hundreds of thousands of dollars in the markets, and that's not expensive. What expensive is the education.
But they see like a cost, but even in the fintech, I have seen this many times. You are going to open a fintech company, maybe you probably spend $250,000 or $500,000, and you do not want to buy $1,000 or $2,000 consultation to have a full idea of all the options on the table. I don't know why they see as a cost, but it could generate much more expensive. The same in education, the same when you're opening a business. I don't know why it's still, but the things are changing slowly.
Yeah, people are getting used to it. That people are starting to understand that learning from somebody is not a shame, and that you have to break a few eggs to make an omelet. So maybe you'll pay somebody for education, maybe you'll get nothing out of it. But you have to try. If you compare it to even trading education, if you compare it to becoming a doctor, how much does it cost to become a doctor in the United States right now, for example? It can cost you like $1 million, really. And then you're going to be paying off your student loans for the rest of your freaking life. Even if you take the most expensive course in the world of trading from some famous guy, or I don't know, you go for Assisted Plus package of my learning program, which is quite expensive. It still is going to be
a fraction.
It will be this small compared to becoming a lawyer, a super cool IT specialist or whatever. So this is also imperative. So I think that anybody who is looking to get into the stock market, it's nice to have a helping hand. So that will save a lot of time.
Absolutely. What is for you the most underrated market, just to come to an end, because the people are...
Okay, all right.
By the way, keep watching.
Yeah, I think a very, very important topic, and that is something that I wanted to discuss in this video as well. A lot of people are focused very much on the United States stock market, and it's an amazing market. I mean, it's like on steroids, so it grows like crazy. But dividends are quite low, mostly.
Dividends are quite low, but yeah, they grow in. Yeah.
So it's quite a tough market to be in. It's highly competitive, and most of the time it's overvalued, in my personal opinion. Especially, you know, things like Tesla and stuff. It's a bit crazy. But one of my favorite markets, and that is something that I'm also teaching my students at thomaskralow.com, and that is the Russian stock market. It's the market that anybody can join. And this
now
is
even in an interactive broker you can trade.
In interactive brokers, they have the Moscow Stock Exchange. Yeah,
and the commission not too high.
No.
So even for no Russian, you can trade without any problem.
And this is actually the cheapest, one of the cheapest stock markets that you can trade. And I mean, if you want to practice, and this is the stock market where you can put together a portfolio of like a few $1,000s. I mean, it's going to be like 200,000 rubles, but it's going to be like, whoa. So you can actually put together an interesting stock portfolio with even a few thousand, just to practice. You ain't going to make a lot of money off of it, but you're just going to practice what it means to diversify, to study the charts, to study the fundamentals of the company, and etc.
Absolutely agree. Yeah, absolutely agree. And I had the same experience, and I really loved the Russian stock market. And there were a lot, especially during this pandemic, there were a lot of interesting opportunity to invest in. So like Sberbank, Yandex, Gazprom, of course. Yeah. It was very good. There were very good opportunity to enter into the market, and it's pretty much safe because the company are really huge. And this I agree with you. It's absolutely underrated, and there is a lot of opportunity to make good money, and you can practice a lot, and you can really make a good money, and also tax wise.
And it's
sorry. And as well, tax wise are cheaper than American market, where there is a 35%, while in Russia it's much less.
Yeah, the Russian stock market really, it's one of the most, in my opinion, it's one of the smoothest ones. So most of the stocks are actually undervalued,
I think. Yeah.
And when the first COVID wave, I remember I bought into about also 10 to 15 different stocks. We've put together a really interesting portfolio at an average discount of about, it was on average, because we were, parting out our deposit, and we were putting into, as the market was going down, we were putting in step by step. So remember, the average discount that we got in was like 30-something%. So it was amazing. And within just a few months, it pretty much recovered that, because when you're investing into AAA stocks of Russia, for example, as you said, Gazprom, I don't know what has to happen for Russia not to inflate the stock and support it synthetically, because it's like national company.
Yeah, of course. Gazprom is one, I think, of the.
Yeah, Sberbank, the same thing.
Sberbank, absolutely.
Airflow, they will always recover, because this is one of those 100%. Almost, I shouldn't say 100%, there's nothing 100% in the market, but this is one of the safest ways to invest.
Absolutely.
And then,
and also to keep well the money.
Yeah, and even if it recovers slowly, you will earn dividends and dividends, if you don't know what a dividend is, this is something that a company pays you interest per year based on the amount of shares, the stocks that you actually own. So, for example, in Russia, some of the companies, in the United States, some of the companies pay nothing, or some pay like 1%, 2%, and people are happy about it for some odd reason. But in Russia, some of the stocks can pay you up to like 10%, 12%. So, if you have $1 million in the Russian stock market and it doesn't move in any direction, so there's no profit, no loss, so it's just static, you'll still make at least like $100,000 just on the dividends.
And I like so much the idea of dividends, because the only risk you may have into Russia stock exchange is the currency exchange between ruble and dollar, or your home currency. But the fact that the dividends are so high comparison with American market or European market cover this risk. So it's really, really an interesting market to study and to jump into. And I agree with you. I did the same, by the way, during this pandemic. So absolutely, I agree. Thank you, Thomas. Always nice to talk. As usual, we did a very long video, but
we're trying to share. So
we try to share as much as we can.
Yeah, thank you. Thank you very much for having me.
My pleasure. Thank you for watching this. Thank you for watching this video. If you're not yet subscribed to my YouTube channel, smash the button now. I will put link in the description to Thomas' website, to my website, so please check it out. Thank you for watching this video and see you soon.